today. Today I have Sam Harith here with me from the Economic Accountant. Hi, Sam.
Hi, Anamari. Always great to be back here. I love these sessions. Oh,
I
look at
know,
that,
me
there's a fly.
too. We're going to be talking about grow your business through financial tracking. So Sam has done a number of sessions with us on various different topics, all related around finance, fun in finance. Yeah. So what I love about your session, Sam, is that as you previously were, well, you're still an educator. I mean, you were a professor, and you know how to keep us entertained while teaching us about finance, how to pay ourselves. We've learned about how to pay ourselves, how to structure our business so we can scale. We have covered off how to do things with the IRD and tax. And now we're talking about how to grow your business through financial tracking. So it's almost like a whole little book we're building of great insights into the accounting aspect of business growth. So if you'd like to ask Sam questions throughout this session, use the comment section or the Q&A section in the chat feature, wherever you are. I know a lot of you sit on the social media platforms, and you can check out Sam's cool financial blog at The Comic Accountant. And he also has a financial firm called SH Advisory. So yes, welcome, Sam.
Thanks, Anamari. Thanks for that awesome introduction.
Was it? Oh, you're welcome.
It was really good. It was really good.
My pleasure. I know you've got lots of information for us today, so I'm going to let you get started. I'm just going to open up all the chats. So thanks.
Awesome. Cool. So I'll start off by sharing my screen. Oh, hang on. That's the wrong button.
Okay, I'll wait till you get yourself sorted before I
There we go. Yep, there we go. All right, cool.
Yeah.
So, yep, like Anamari pointed out, today we're going to talk about growing your business through financial tracking. So a lot of the previous sessions that I've run before were a lot more to do with things like getting your business startup right, paying yourself, sorting out your taxes and things like that. So a lot of that was more geared towards startups, people just starting off, people doing their first year of business, first few months of business, just trying to get themselves on the right track. But today we're going to talk a little bit more about financial tracking. So this talk is actually aimed more at businesses that have been in operation for at least 6 to 12 months. They're looking to grow their business over the next year. They're looking for what's the next steps. And they're wanting some financial clarity over what those next steps are going to be. So we're going to talk about how we can grow your business through financial tracking, all right? So what we're going to learn today is we're going to use data analytics to grow your business, right? Data analytics is an area that has been experiencing a lot of growth in the past 10 years. And I'm sure most of you will have heard of software like Power BI, which is used to visualize data. You can use Power BI to connect with, say, your CRM softwares or your accounting softwares, or even your Excel spreadsheets to visualize data. However, Power BI is a little bit out of reach for your average small business. The connectors that you need to buy to use with Power BI can be quite expensive, and they can and as a small business, you may not necessarily be needing all the functions that come with Power BI. So today we're going to actually look at a software that I've been using for our firm and also trialing on some of our clients. It's known as Genie, and I'll show you the website for that later, gini.co, right? And it's a cool little software. It's really, really affordable. And the best of all, it puts out your data onto a spreadsheet, and you can actually even make further fine tunes to your data analytics. But before we get into that, let's talk about the structure of today's lesson. So we're going to look at how we work with data analytics software. We're going to talk about setting your financial goals and then the tracking/coaching process, all right? Because it's not good enough to simply have data. You want to be able to action on that data. You want to be able to do something with that data. So let's go on into the future, all right? Financial data analytics for small businesses and startups. So let's talk a little bit about data analytics software. So there are a lot of different solutions out there. As I mentioned before, you've got big players like Power BI by Microsoft. On the smaller scale, you've got companies like Float, which do forecasting. There's also Futurely as well, who are quite similar to Float. And we've also got a new player in the scene called Genie, whom I'll be talking a little bit more about today as well. But what all of them have in common is that they summarize your data, and then you use this data summary to help predict your future. And because it predicts your future, it helps you plan ahead. Of course, there isn't a single software out there that can accurately predict your future performance. It doesn't exist, right? Futurely makes the claim that their prediction software is better than their competition, but really it's just a matter of them choosing to use algorithms instead of using machine learning in order to generate your results. What is the exact difference between those two? I can't really say, but the bottom line is that there aren't any softwares that can accurately predict your future performance. And a lot of these things are just giving you benchmarks. But benchmarks are important because they give us a guideline that we can work towards, goals that we can achieve. So how data analytics software works is that they will extract your data from your accounting software, right? And then it gets captured by your forecasting app. So this can be your Float, Futurely, or Genie, right? And then it is displayed and summarized for you. That's it. It's that simple. Of course, the bulk of the analysis comes in this part where we're trying to summarize and make sense of the data, right? And so what it looks like, it'll look something like this. So this is a screen grab from Genie, okay? And this is what your forecasted financial cash flow breakdown is going to look like, right? And we'll take a look more at this in greater detail when I demonstrate the software to you. So that's the first part, right? How data analytics software works and how it can potentially be of use to you. But before we can actually make use of data analytics, we need to have a reason why we're using it, right? And that's where we go towards building financial forecasts, okay? So building financial forecasts here is where we start to talk a little bit more about your goals, your financial goals as a business, okay? And so we have here what is known as our little goal setting process, where we start off, where we start off with our current performance, right? And then next we set our goals. We outline the strategies to achieve those goals. We monitor the performance of those goals. We generate a performance report, and then we go back to our new current performance, and then the cycle starts again, right? And so this is something that you would do, say, every 6 months or every 12 months, depending on how frequently you want to keep tracking those goals. So let's say in terms of current performance, let's say we've just made $100,000 of sales in the last financial year, okay? And we've made profits of $50,000. We've got a profit margin of 50%, and we've got 20K cash in the bank, right? And so from there, we want to then set our goals. We'll say that, all right, cool. So over the next 12 months, we want to increase our sales to 150K, and we want to make monthly profits of 6K, right? So that's just some rough goals that we've set for ourselves. Then we're going to outline the strategies. How are we going to achieve those goals? Let's put out some new marketing. We've got some content strategies, new products, services, new staff member, right? Maybe you're buying new equipment. If you are a plant and machinery heavy industry, perhaps you're looking at getting a new machine, a packing machine, for example, or a freezer or a new car, etc., etc. All right. And then you put these down and you start outlining the strategies. You'll be putting this down on a document. And then you monitor your performance. You run financial reports every month to check how your business is doing. And you also need to check if your spending is on track. Finally, you're looking at your performance report. And these reports should be done continuously, say maybe once a month. And then you want to track how your business performance relates to your business goals. And then we're back where we started. We're looking at current performance and what does it look like now, right? So that's the goal setting process. And that's the idea behind the idea behind the financial tracking process, where we are understanding where we want to grow our business, and then we're using that as a guideline once we start using the software. All right. So, and the last part is the tracking and coaching process, where we are keeping an eye on our goals. Okay. So using the financial software, we can start to predict our growth, right? And this is where we're actually, once we've done the goal setting process, this is where we're actually putting in those predictions into the financial model so that we build up better forecasts, right? You can predict your goal, your growth. What was your sales like in previous months? What will it be like in coming months, right? And this is just a screen grab from Genie, and we'll walk through Genie after this, I promise you. And then we'll be planning for future expenses. Say we are planning for capital expenditure over here. We're planning for capital expenditure over here, right? And maybe we are getting new staff members in, right? Or maybe increasing the salaries of our current staff members, right? And then finally, we can make sense of it all by viewing the 3-statement model, which is the forecasts which have been put out for you using the software. All right, now it's all fine and dandy for me to be saying all these things, but let's take a look at the software itself. So let's talk a little bit more about Genie here.
Hi, I wanted to just jump on. Oh, okay. And I'll just grab a link to Genie so that people can have that.
Yep,
no worries.
it's genie.co. Yeah. So just make sure that, so genie.co, this is what Genie looks like, and you can sign in for a free trial. And it's the pricing is really, really affordable. It's only $20 a month, and you get access to quite a lot of things. And it's a pretty powerful little tool, and it works by connecting with your Xero or your QuickBooks. So it works with Xero or QuickBooks, right? I use Xero. QuickBooks, I think it's more popular in the US, I believe. And it also helps to create financial models for you on Google Sheets. Although Genie is developing their own in-house sort of like web app where they can display these reports, I do quite like the fact that they go onto Google Sheets because, yeah, genie.co, yep. I do like the fact that they go onto Google Sheets because you can actually do a few more tweaks and modifications. You can put in comments if you like. And I'll show you how that works. So by clicking the output model here, I get an output of my business performance so far. So the first page that we're looking at here is your cash flow forecast model, right? So your cash flow forecast model has a few different scenarios. So you have the AI best case, right? And the AI best case scenario here says that, okay, well, the AI is going to take a look at your performance for the previous financial year. And then they're going to say that, yep, you're probably going to make as much money this financial year as you did last year, right? As you can see that it predicts me a sales drop of 77% and then a sales drop of -3, -1, because last month we made quite a lot of money, certainly a lot more than what we made in May 2021. So I think this is unrealistic because, again, AI is only as good as the historical data that you feed into it. However, if you have been in business for a while, the AI may work a little bit better because the older your business is, the more stable the sales levels tend to be. And you can actually also have different predictions for 20% revenue increase, for example, or worst case, 20% drop, right? Or a stress test where you go 50% drop. But what I want to show you is the custom revenue growth, right? And the custom revenue growth is taken as the growth in the blue line here. And so if you take a look at the slides that I just shared earlier, all right? So this is where we're predicting it in the custom growth, in the custom revenue growth here, all right? So this is where we want to be predicting our revenue growth. Now, in our case, we're saying that, okay, well, we've had a really good April month. So we'll say that we'll just be a bit conservative and say that maybe our sales will drop by 5% this month, perhaps, right? But in June, it should increase out to 5%. And in July, it should increase by another 5%, just because of the natural growth of clients joining our business. In August, we're saying it grows by another 20% from the previous month, because we've landed a consulting contract, for example. And in September, we're maybe dropping by 10% because we're not having a consulting contract anymore. And November, December tend to be some of our strongest months. So we have a higher percentage given over that. And January, February, March tend to be some of our slower months. And because it's all on sheets as well, you can actually put in little comments into each box to justify why you put in those figures. And this is really, really useful for you to look back and look at why you made those assumptions. And it's really good for if you're working with an accountant or financial advisor, or your accountant as well, to look in and go like, okay, so these are why we are working with these assumptions, right? And you can change these figures if you like. So say, for example, maybe we have a 5% drop there, right? And that will affect our custom revenue model, okay? The next line is your cost of goods sold. Now, cost of goods sold is typically taken as a percentage of your actual direct costs on your accounting software, the percentage of your direct costs over your actual sales, okay? And so in this case, we've worked out to have cost of goods sold of about 13%, right? And so we'll say that the cost of goods sold can remain constant, but again, anything in blue can be changed. So we can say that this is 15%, and we can even copy and paste it all the way down here, that way, right? Next, your overheads and expenses will be taken as the amount that you spent in the previous month, and it will project it forwards as the same number each month. You can, of course, adjust your custom overheads and expenses accordingly. And you can do this if, say, for example, you are making a new recurring expense of perhaps a new subscription that you're paying for, or you are renting a new office, for example, right? And then down here is where we have your working capital assumptions, your receivables, your inventory, and your current liabilities. But we don't really have to worry about this too much, because we're mainly concerned about the cash flow of the business. So by adjusting these assumptions, and so you'll notice that it actually gives you quite granular ability to really adjust your expenses and your revenue growth as well. And then that shows you your cash and runway forecast, okay? And that produces for you what your cash and runway forecast is going to look like based on these assumptions that you put up here. Right. And now remember that your assumptions that you put up here are based on how you think the business will grow, and also how you would like the business to grow as well. And often you would probably be sitting down with your business partners or your financial advisor to work through what these custom numbers are, right? And the beauty of it is that it then produces a nice looking graph for you, which shows you in the next 12 months what your cash balances are going to be. So right now, this is our current cash balance over here, right? And then in the future, assuming the forecasts hold up, we'll have more forecasted cash on hand based on the amount of sales that we're generating, okay? And if you think this is too optimistic, you can always go back to the assumptions, increase your expenses, reduce your sales, and so on. There's an income and expense forecast as well, right? With green showing your revenue, and it's being offset by your overheads and expenses and your cost of goods sold. And then you'll have a forecasted cash flow breakdown as well. And that shows you how much you're making from your operating activities. Anything in the upper portion is a positive. Anything in the lower portion is a negative. And we'll come back to this a bit more as I walk you through the sheets. And we have a forecasted balance sheet breakdown, which shows you the situation, your balance sheet. But really, you just want to look at this forecasted assets figure, which is the blue line here, because that's the most important thing. Right. For better planning granularity, there's another sheet called the Finance and Capital Planner, right? So the Finance and Capital Planner talks about things like, okay, what if you have capital expenditure? Capital expenditure here means like wanting to buy a new car, wanting to invest in new software, wanting to get some new machinery to run some manufacturing processes, right? And then you can say like, all right, cool, how much is that going to cost me? So we'll say, for example, I'm going to spend $10,000, right, to buy some new machinery. And I'm going to do that in October of this year, right? And in order to raise money for that, I am going to take on some debt. I'm going to get a bank loan. So for $5,000, okay, for $5,000 in September, right? Okay, and then it's starting in January. I'm going to start paying off that debt at 1,450 a month, right? We can even have predictions for dividend payment or equity issuance if you're selling off equity to other shareholders. And so this puts it down into a nice little financing summary. So we can see here that, right, we are going to get some money in, $5,000 here, but in October, we're going to spend $10,000, right? And then we've also got our little capital expenditure of January, February, March, April of 1,450 a month just to pay off the debt that we took on earlier, right? Actually, that probably should be 7,000, right? Okay, because 1,450, right? Okay. And so we go back to our cash flow forecast model, we can see that this will be reflected and now forecasted cash flow breakdown. So as you can see now here in October, we are spending $10,000, right? But in September, we've got $7,000 coming in from our financing activities. See that? And starting from January onwards, we've got the cash going out, and we've done all this through the capital expenditure planner. So when we look at our forecasted cash flow breakdown, we can get the idea of like, okay, so this is what it's going to look like, right? And if we look at our cash and runway forecast as well, you've noticed that the cash level has gone down simply because in October, we are going to be having cash coming out of the business, right? And then that will also affect our total cash at the end of the 12-month period. So it's a really, really great stress testing tool, because now I can see that, all right, if I spend $10,000, right, I'm going to be out of pocket, say this much of money. But if I issue some debt, I should be able to cover myself for the next 6 months or so, all right? On top of doing capital expenditure planning, because this is really, really good as well, especially if your business is in growth mode. Let's say, for example, for our business, for example, we spent a lot of money on getting a new website up. We've spent a lot of money on getting some new marketing strategies done as well. And that obviously has cost us quite a bit. But because we're using this tool, I know that we can afford it. I know that, yes, based on the predictions, we are going to be making enough sales. We're not going to be putting the business into a bad position. And we're still, most importantly, we're still going to have cash to run until the end of the financial year. And so doing this planning gives you the confidence to execute those plans, to invest in the business. Because I think often as business owners, one of the hardest things to do is to justify spending on the business. But with this Genie software, with this financial planning software, you can actually do that, and you can do so with confidence. Now, the other thing that I want to talk about as well is the headcount planner, because part of growing also means expanding your team as well. And so you can actually add in new employees. So for example, over here, I'm thinking of potentially increasing the salary of my marketing guy, right? And I'll say that, cool, we'll bump up his salary by an additional 440. Okay, just bearing in mind that his current salary is already reflected in the overheads and expenses that we've calculated earlier. And so let's say I want to bump up his monthly salary by 440, right? Maybe I give him some additional benefits for, say, $100. Okay, and if you are putting tax away for your employees, you'd also put away money for tax over here as well, right? If you are using contractors like we are, then you don't have to worry about their taxes. All right, and that works out the total monthly compensation. And I'm also thinking of bringing in a new content creator for the business to help me out with blogs and stuff. And so, you know, on a part-time basis, that will cost me about $800 a month, right? And then that is the, and we're going to start them in June as well. And that's the total monthly compensation. Okay. And then the headcount plan, impact operating expenses, will tell me like, cool, my hiring plan will increase my fixed cost by 36%, right? So to break even, I need to increase my revenue by 900%, all right? 900% from where it is sitting right now. But what's more important is that when I go back to the cash flow model here, and under assumptions, I can choose to whether I want, in this line here, whether I want to look at overheads and expenses alone, or do I want to add in the headcount planner as well? So if I add in the headcount planner, you'll see that from June onwards, I'm paying about $5,000 a month for expenses with the new stuff, with the new headcount, right? And now we're going to look at how that affects my income and expenses forecast. So I can see that I'm still making as much money, but as you can see, the overhead and expenses have increased quite a bit here, right? And my cash flow breakdown, my cash from operating activities is going to be lower as well, because I'm now paying my staff more money, right? And so these are the many different assumptions that we can make in Genie, right? And again, as always, you can also put comments in the box. You can go like, all right, comment may have to increase from 500 to 900 a month, for example, right? And so then when you click on these boxes, then you'll know exactly why you put in those assumptions. And it's one of the beauty of being able to work in spreadsheets as well. Now, the last bit to sum it all up is your three-statement model. Okay, and your three-statement model is your income statement, your balance sheet, and your cash flow statement, right? And so what it does for you is that based on the initial assumptions that you put in earlier, you can take a look at your historical performance. This is how you've been doing in the past. And as you can see, we've actually had some pretty phenomenal growth from October all the way to April this year. And you can see how that projects forwards into the future based on your assumptions, right? And you'll notice that things like your increased overheads or staff expenses will be reflected in here as well. Okay. And then this will give you your profits for the next financial year. And there's even a little graph trend here that you can observe to see what the trend is like, right? Same with your cash flow. So it's same with your balance sheet, right? And same with your cash flow as well. Okay, because remember that cash is not the same as profit. Cash is how much cash you have in the business, whereas profit is how much money you're actually making. So in this case, this is my net cash flow, right? And it sort of like goes up and down, right? But my cash balance will continue going up based on these current projections, right? And at the end of it all, you can generate a monthly report, okay, which shows you your cash runway, your financial overview, and also, oops, growing too fast, and your headcount plan impact on your operating expenses. And you can even print this all out onto a nice sheet that you can save for your monthly report. And then the next month, you'll do the whole same process again, except that you maybe just might want to tweak your assumptions a little bit. And then that will tell you how you are on track. So how is this useful? This is useful because you can use this to track how well you're meeting your financial goals. So say, for example, your goal was to hit $200,000 worth of sales in this financial year. You can make the assumptions that you will hit the 200,000 sales based on your monthly sales growth. And then each month you can review to see whether or not, okay, did we meet our targets that we set in the last monthly report? If we didn't meet our targets, what can we do, right? Are the new staff members that we hired, are they actually generating more income for the business? The new expenditure that we spent on subscriptions and all these advertising and marketing programs, are they paying off? You know, can we reduce those costs? And if we reduce those costs, what does it look like for us in the future? Okay. And remember that you can actually go into your forecast models, and you can even adjust these overheads and expenses, right? And you can adjust this one to say perhaps even $4,000 or $5,000 or whatever it is that you like, in order that it better reflects where you think your business is going to be in the foreseeable future, right? And yeah, that's data analytics for small businesses in a nutshell. And now these are tools. These are the sort of tools that are used by larger companies that have more things to worry about, right? Companies turning over, say, $1 million, more than $2 million a year, would also be making use of the same sort of financial analytics to keep track of their performance as well. But now we have these tools available for small businesses. And if you are a startup company, and if you're looking to get investment from, say, venture capitalists, or even wanting to borrow money from the bank, having these sort of forecasts is really, really powerful. And having the ability to justify the numbers that you've made is really, really powerful as well, because you can then take these numbers to your financiers and then say, like, okay, cool, this is what my numbers look like, and this is what we're projecting to earn in the future. So therefore, please invest in us, for example, right? And yeah, so that's Genie, and you can do this yourself. Or, you could work with a financial advisory firm like ourselves. And because we are rolling out this new service where we are working together with small business owners to help basically become their digital CFO, right? And to help them track their finances, track their processes, and ensure that they are on track to grow their business. So we head back into our slides here. Right. So that's how we use the financial software in order to predict your growth, plan for future expenses, and finally, we can make sense of it all. And then every month, you would generate that report, and then you can use that as a benchmark to track your performance month on month and to see, okay, am I actually meeting my goals or not? All right. So if you're keen on talking to us more about the financial tracking process, definitely get in touch with us at shadvisory.co.nz. And if you are looking for free blogs, free information on accounting and small business, anything small business related, check us out at thecomicaccountant.com. It's a new website now. Our old website got hit by a virus and we had to exit. But we've got a new website coming up, and we've got a new rebranding as well, as you can see there. And before I finish, I always like to leave with a comic, because we're talking about spending on your business. And so this is a very good comic to talk about how you would spend on your business. Cool. I guess we can open up the floor for questions.
Okay.
Mhm.
Well, first off, I think Sam actually, he didn't toot his own horn, as we say, but just so that those of you watching are aware, Sam's accounting blogs and these that go along with these comics actually are ranked like 50, in the top 50 in the world for financial blogs. That's why he got targeted for like a cyber attack.
That's our theory anyway. That's our
Got such a
theory.
high profile.
Yeah, we will rank top 50 by share site.
It's very, very cool. It's a huge accomplishment, and it is because what you put out there is that good. And I think why I like your stuff so much is because it's really easy to understand. And I think that a lot of us struggle with financial kind of aspects. So of business or life, so I know that you do a lot of mentorship with folks that you work with, just helping them to set up and move forward and create a scalable business, and talking about different ways you can do that through accounts and through just looking at these kind of analytics. So if you do want a little bit of one-on-one, do reach out to Sam and his team. They're great. And yeah, I don't have any questions myself, Sam. I'm trying to think of one, but I followed along. I did drop in all of the chats the Genie link to Genie, and I've also dropped the comicaccountant.com into all the chats across all the platforms. If you have questions for Sam, like, you can always reach out to him. Would you say that reaching out via the website is the best method for that?
Or reaching us out via SH Advisory would be the best method. Okay. I should also point out that the comic.accountant.com is still under construction. So if you look at the website, it will look something like this. It will look something like this. So it's not looking very flash at the moment, simply because our web developer is still working on it, and we hope to get it up and running by next month. Like, I don't know who this kid is. I don't even know who he is. So not my kid. Right.
Wait, we can't see it. We can just see
your
you
slide. You can't see it? You can't see it? Oh, sorry. Yeah. I forgot to change my share. There we go. Yeah, so that's the comicaccountant.com. And that's what it looks like at the moment, because it's still under construction, but you can still access the blogs that we've written, right? We are still producing content, but the website itself is not really 100% ready to go. So it's still very much in its beta stage at the moment.
So there's a question here. It says, I think possibly it's supposed to say Genie. Oh, yeah. Okay, thanks. It says, can Genie connect to WooCommerce or backend e-commerce websites, Shopify, etc.?
No, Genie can't connect to WooCommerce or Shopify at the moment. But what you can do is you can connect your WooCommerce or Shopify to Xero, and then the financial data that is transferred from Shopify or WooCommerce into Xero will get captured in Genie.
Okay, yeah. And there might be, I'm wondering if there's ways to do it with Zapier or something like that. I don't
possibly know. I'm not sure. And also I think Shopify and WooCommerce would also have their in-house data analytics if you're looking at tracking things like sales and your revenue per customer and that sort of thing.
Maybe pull up your SH Advisory site, because I just dropped that in the chat so people know what it looks like.
Sure. So this is our SH Advisory site.
I just want to say to that person on Facebook who asked that question, you're welcome. And also do let us know if you need any help with integrations or something with Zapier. If you wanted to try and see if that worked, if you don't want to use these other methodologies, just reach out to the support team, support@digitalboost.co.nz. We're happy to help figure out how to make that work for you so that you can use this and apply this information into your business every day. So love the site, Sam. Look at that great photo of you. Oh my God.
I'm thinking of updating it next year, but I've spent I think we've already spent quite a lot of money on websites and stuff this year. I'm just gonna
well, hold off, put it in the budget, don't you?
Hold off on that until next year.
You love your restraint.
Yeah.
No, that's wonderful. Thank you so much for this session. Really great insights, and have a go at that Genie app. I mean, obviously, if there's like a trial period, try it out.
Yep.
See if it
So
works for you.
Genie, yeah, the Genie app is really good, and it's really easy to use as well. But I think most importantly is that it actually it's really affordable. It's
Yeah.
really affordable compared to a lot of the other solutions out there.
Yeah, and make sure that, like when we're talking about tools for your business, certain tool, we always need to go through a bit of an audit, I think, every now and then, and have a look at all the subscriptions that you have and whether or not you need them, but make sure that you are putting some, funds aside so that you can have things set up that actually help you to measure your growth. It's really great to have lots of tools that help you spit out your social media posts and do all of that kind of stuff. But if you're not actually looking at the data that's coming in, you're kind of flying blind. So
That's true.
Sometimes tools like this can give that visibility, and that
Exactly.
might be, more important than having, something else if you need to change it out.
I should also point out as well that what differentiates Genie from its competition as well is that you can actually apply for financing through them.
Okay.
So if you are, if you're like a startup, if you're like a tech startup, or if you're looking for venture capitalist funding or even debt funding as well. So Genie has a network of venture capitalists that they work with. And so you can actually apply for financing based on your revenue that you've generated so far. So revenue-based financing basically means that you get a loan, which is based on a percentage of your current sales, which is based on a multiplier of your current sales. And then your repayments is also based on the amount of sales that you make.
Yeah, cool. That's great. What a great.
So yeah, that's probably one advantage to using Genie over the competitors as well, on top of the fact that they're more competitively priced. In terms of pricing, I do believe
just an
that
FYI, Sam doesn't work for Genie. So
sorry? No, I don't actually work for Genie.
You don't work for Genie.
I'm raving about it because we really do like it. We use it. And like I've looked at a lot of different financial softwares, and this is the one we feel like, really meets our needs at this stage in time.
Which is cool. It's great to get advice from an accountant / financial firm on what tools are good for finance, because that, that's priceless, really.
Yeah. And so, yeah, as you can see, the basic package is only $20 a month. So that's about 25 NZD a month, which really it's not a lot. I mean, you'll pay what, $60 for your zero subscription. You'll pay maybe a lot more. You'll pay your accountant a lot more than that, that's for sure.
I know. Yes, indeed.
So,
and just having that visibility is super important. Taking your business seriously, obviously if that's not within your reach to have something like that, then there's probably workarounds. So don't stress about it, but this is some great advice from somebody who works in finance. So just a tool tip right there.
Yeah. And and if you are looking for any special deals with Genie, so we've got a working relationship with the folks over at Genie. And so if anyone's interested in subscribing to Genie or looking for discounts on top of that really competitive price already, feel free to reach out to me, and we can put you guys in touch with the Genie marketing team, and I'm sure we can work something out.
Okay, cool. That's awesome. Thanks, Sam. That's really great. This was great because I didn't even know we were going to get into a tool today. So it was like really fantastic to actually see how it all works. I love that it pulls through to Sheets. That's awesome. And connecting with Xero. So many people use Xero. I wonder if it connects with MYOB as well. Does it? Do you know?
At the moment, no.
Okay.
At the moment, no. Yeah.
Sorry, y'all, if you're an MYOB person, but so that's okay. I'm sure there's something else.
I mean,
something with MYOB.
I'm sure if there's enough support for it, they will put it out for MYOB. But to be fair, though, MYOB is a little bit slow on the uptake when it comes to cloud computing, unfortunately. Yeah,
I would say as well, like a lot of, just like any app, any kind of platform that integrates with other platforms, really most of the time their partnerships are based off of requests. So if
Mhm.
you're working with some software and you really wish it integrated with something, reach out to that person, that provider, and be like,
Mhm.
hey, why don't you integrate with, blah, blah, blah,
X
because
software, yeah.
yeah, because usually those two people will work out a deal and, they'll make it work, because what works, for you might also work for somebody else that's looking for it, which will draw in more people. So never be afraid to contact these kind of guys and say, hey, why don't you integrate with somebody else? Because we want that. And then they'll probably get their team on it. So yeah. Thanks, Sam. Thanks for this fantastic session. Looking forward to a future session with you. And it looks like we've got our questions covered on LinkedIn and Facebook. So I'm happy about that. And
Nice. And yeah,
yeah, and
that's really surprising. We actually finished within time, like, because we usually go overtime.
we do indeed, don't
Yeah.
we? Oh, goodness. Yeah, and there's lots of good things coming up in the next few months. We're going to be doing some shuffling of how we do things here at Digital Boost. So as far as our Q&As, and I'm looking forward to that kind of refresh and to zeroing in on some stuff and future work with Sam and your team. So thank you to your whole team for getting this all together.
Sure
And
thing. I'll pass on the message to them.
thank you. All right, y'all, have a great day, and I will see you all tomorrow. Ka kite.
Bye.